cash value life insurance is most useful for people who have already maxed out their IRA and their 401k and have a high net worth. Wrong. That could not be more wrong. And wrong. That's wrong on top of being wrong. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation in our Myths, Mysteries, and Misconceptions series, we're going to address the idea that cash value life insurance is really only for high net worth individuals or folks who have already maxed out other investments. So let's just start right from the top. Let's define, and this is so important. Nash, in his book, Becoming Your Own Banker, addresses the problem of misclassification. So right out of the gate, we certainly need to make a distinction between savings, investing, and banking. So to appropriately classify these three different categories, let's go with savings being a place where you can securely, safely, with some guarantees, I would suggest, save money, not expose it to risk, actually save money. Because these folks who talk about whole life insurance as an investment, sure enough, are the same folks that are swapping these words interchangeably, saving and investing, and that's just not the case. So investing, this other category of investing, is a place where you have upside potential to have your money grow. But that assumes risk. So it may also diminish or even completely go away. And then we get to banking. Banking is a process. Let's start with banking is a process. Now, if you just consider food banks, river banks, snow banks, blood banks, a bank is just some place or some entity where some form of capital, we're going to use that word, capital, is amassed. So a bank is a place where capital is being accumulated. Money is being built up or amassed. Now, banking is a process also. So everything is financed. All the goods and services that we consume are financed either, and this is banking. This is us discussing banking. We've talked about savings. We've talked about investing. We're talking about banking now. The ways to finance are using credit, using debt. So with credit, you request someone's permission to use their money on their terms and conditions if they approve you to pay them interest, possibly providing collateral, etc., to go out and do the things that you want to do with money. Or you save up money, you accumulate it. Okay, we're going to call this the cash method. So credit, cash, we'll get to a third C here in a second. But the cash method is you save up the money that you need for whatever it is that you want to do. You liquidate that, go out and buy that. So in both of those cases, it's important to recognize that financing is taking place. Either you are paying someone else interest or you are forfeiting the opportunity to earn interest on your capital. So the third C is going to be compounding. You can actually experience, by becoming your own banker, an uninterrupted, constant upward growth trend of your capital, a compounding of your capital over your whole life. And the ideal asset that we use for that is a properly structured whole life policy with a mutual company that pays a dividend. That's how we can experience compounding for the financing that we want to do. So whole life insurance is the ideal asset for becoming your own banker, for implementing infinite banking, for making the purchases of goods and services that we're all going to do. Now that we've appropriately classified savings from investing and banking, recognizing that everything is financed. Savings are financed. Also, investments are financed. But we need to make a clear distinction between whole life insurance policies, which are a contract. Definitionally, a whole life insurance policy that has a high cash value, the kinds that we would use, is a contract. It's a legally binding, unilateral contract. So a policy is a contract. A policy is not an investment. I've actually already covered this. Let's see, that would have been episode 4. So The fourth installation in our Myths, Mysteries, and Misconceptions series is where I addressed whole life insurance is not an investment. While I'm listing these, number 9, the Myths, Mysteries, and Misconceptions episode, number 9, whole life has a bad rate of return. I actually addressed that. So those are 2 relevant places where I think you would like to discuss this further or listen in further on my thoughts. But let's continue. Let's continue with saying that whole life insurance is not an investment in and of itself. It's a policy contract. Okay, now let's address the part of this myth that, well, these types of contracts, these types of policies are only for high net worth individuals who've already maxed out IRAs, 401ks, etc. So again, we've already covered that whole life insurance in and of itself is not an investment. It is a contractual right to compound your capital, have a tax-free death benefit, access to liquid capital over your whole lifetime, etc. It's lots of things, but it's not an investment. Now let's address the first part of this, though, where folks are saying, and I found this, I mean, this isn't me making this up. Let me go ahead and make another reference. So I found this particular quote, although others have said it, from Policy Genius, and I have read a fantastic an excellent article from Ryan Griggs. You can find him on medium.com. Ryan Griggs, where he had an excellent article on Policy Genius, and I can put information on that in the show notes here. But others have said this as well, that, okay, well, if you considered getting one of these high cash value policies, maybe you would do it after you had fully funded, whatever the match is on your 401k, do that first and fully fund your IRA and do X and Y and Z first. Here's what I would like to point out. Only looking at, and this is the problem, this is the error of associating whole life insurance with investments, is the average American does this. The average American earns some form of an income. And then what happens to that cash flow? Uncle Sam gets his cut. Perhaps some of that cash flow is dedicated right away. It's just auto drafted out of our check. We never see that money into these 401ks, etc. And then we have the remainder direct deposited into a commercial bank, which is someone's business. So we're 4 layers deep into money being pulled from us before we ever get it to our own hands. And we've not even accounted for the banking function. Well, taxes are financed. Investments are financed. And banking is a process, and I'm saying that you can control it for yourself and profit from it yourself. So the error of just comparing whole life insurance that has a high cash value to investments is to ignore completely the banking function, is to ignore completely that everything is financed. The taxes, investments, our automobiles, our homes, whatever our lifestyle looks like, our businesses, if you have a business, everything is financed. So it's overlooking the forest for the trees in a way, and it's misclassification in a big way also at the same time. So what I'm saying is, and let me share a part of the book. So in Nash's book, he talks about airplanes. He was a pilot, so he talks about airplanes. And he says, while some people are trying to take an airplane that can go 100 miles per hour, and they're trying to get an extra 5 or an extra 10 miles per hour out of that airplane. They're trying to get it to go 105 miles per hour, 110 miles per hour. They're completely ignoring the environment, because he says no airplane can go through a vacuum, can fly through a vacuum. It must go through an environment. He says, well, banking is the environment. You can control your environment. And of course, again, going back to airplanes, he says that, well, airplanes can be flying against a headwind. Airplanes can be flying in dead space, meaning no wind, no headwind that they're having to combat. And then also they can experience a tailwind. And what he is saying is that by becoming your own banker, you can create a constant and perpetual tailwind. So instead of just trying to get 5 miles per hour faster with the airplane itself, what if you put another 100, 200, 300 miles per hour wind at your tail that's propelling you that much faster forward. And I've got visuals on this that I think that are really helpful that I've walked through before. And again, Nash from the book says that, this is the common conversation around a water cooler or a barbecue or a get-together of some sort where folks are saying, well, I got this amount in the market and I saw this kind of return with these government qualified plans, or I got this, etc. And they're comparing these minuscule percentage differences on investments, while completely ignoring the banking function. I mean, when you realize that banks are earning 400%, 900%, 1,300% on our money, it's the most profitable thing that you could choose to do for yourself, to become your own banker, to implement infinite banking, to privatize your banking, instead of taking this myth at its face value, which is conflating whole life insurance with investments. It's just not the case. And it's to our detriment to overlook the overarching fact and reality that everything's financed. We could control it. We could profit from it. I mean, one quote from what I was reading from Policy Genius said that cash value life insurance gains aren't as high as traditional investments. Again, we've pointed out whole life insurance is not an investment at all. And if you're trying to compare whole life insurance, and you can, you in a way, you could compare certain numbers from whole life insurance to investments. You could, in a way, you could do that. There are two big things that we're overlooking. Number one, whole life insurance should not be reduced down to only considering its internal rate of return, only considering what its growth year over year over a lifetime of owning such an asset would be, because there are so many other characteristics to consider. That's not taking into account that if you just put a 401k alongside a properly structured whole life insurance policy from a mutual company that pays dividends, only looking at a rate of return is completely ignoring a tax-free death benefit to the next generation, is completely ignoring how you're hedging against inflation by owning a policy, because it's a vehicle where you can put in $1 and create multiples into the future, guaranteed. And then, of course, just by me simply saying guaranteed, is there a guarantee with a 401k? It might not go below zero. That's not much of a guarantee, okay? Whereas with a whole life insurance policy that's been structured for banking, that cash value is going to get bigger and bigger every day, every month, every year for your whole life. So it's got guaranteed growth. Well, what kind of growth? Compound growth. That's another attribute. That's another characteristic that's completely ignored. Well, how can you get to that capital? Are there penalties? Are there fees? Is there some age limit that restricts me until I'm 59 and a half to be able to get to that? What are the repayment terms if I access capital from that? Can I do it with or without taxes? Well, in a policy, you have tax-free access to capital. So there are more than a dozen reasons as to why I believe that the properly structured whole life policy is the ideal asset, and I'm using that word, asset, not investment, asset. And if you're only trying to compare it as an asset to some other government qualified plan, etc., then you're trying to reduce it down to just one thing, which even on that merit, there's so much there. There's so much there. But that's not actually the only attribute that a whole life policy has, which again brings us back to it being the ideal entity for you to privately own as a banking entity, as a privatized banking system, especially as you consider building out more of these over your lifetime. I own several of these from different mutual life insurance companies. We've been personally implementing this concept for the better part of a decade at this point, and I'm just trying to share light on this subject for us to not get into the error of misclassifying investments and assets and for us to keep ignoring that somebody controls and profits from the banking function in our lives. I'm here to say that it could be you for you. So I would encourage you to check out my introductory presentation video to infinite banking. You can find that at my website and on the YouTube channel. That's durhamtalents.com. And remember to live and leave a lasting legacy. This conversation has been a great pleasure for me, and I look forward to our next one. I hope you have a great day. Take care.